Hey, good morning, everybody. Today is Monday, February 17th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. The Russell 2000, the NASDAQ Composite, and the S&P 500 all closed above short-term resistance and are all now in short-term uptrends. The next few trading sessions will be critical to see if we can sustain the current move. Let's start today by taking a look at the Russell 2000. What we're looking at here is a weekly chart of the Russell 2000. We have been watching this area of resistance that we established when we made the new high in the Russell 2000 way back in February, March of 2014. That resistance area in the 1213 range held all the way until this most recent week. This week we seem to have decisively taken out that level, and we took out sort of tiddling resistance up here at the 1222 area. If we can sustain this move over the next week, I think that perhaps this market moves a little bit higher, maybe significantly higher. I am a little bit concerned about the bull market. We've been in a bull market since March of 2009. That's almost a 6-year bull market. That's the longest bull market in history. And you would think that at some point we have to have a fairly significant sell-off. However, you have to trade the market you have, not the market you think you should have. And right now, we are at new highs in the Russell 2000. I've always said, or I've said for the past few months, that the Russell 2000 was the key to the market going forward. As long as we hold that 1213 area, I'm going to continue to look for higher prices in the stock market. Let's take a quick look at the NASDAQ Composite. Friday, the NASDAQ Composite closed 36.23 points higher, 0.75%. We closed right smack at the top of our trading range, and more importantly, we gapped higher and continued the up move that carried the NASDAQ Composite above recent resistance in the 4811 area. That area of resistance now becomes support. Friday's move came on a little bit lower volume than the prior day. Right now, the NASDAQ Composite on our 1 to 6 month timing model is showing a margin signal, meaning that aggressive traders can utilize margin to leverage their portfolios. Conservative traders should be fully invested and should have jettisoned the weaker positions in their portfolio and added stronger positions. We are on a confirmed uptrend in the market. We have 4 distribution days, which is relatively high, but certainly not a cause for concern. Right now, the NASDAQ Composite is bracketed between support at the 4811 area and resistance at its intermediate channel high. Taking a quick look at the NASDAQ MACD histogram, we see that again yesterday, or Friday, I'm sorry, we closed above the 0 line in the MACD. We are on an uptrend, which gives us an immediate bias of bullish on the NASDAQ Composite. Next few days, I think, are going to be critical in the NASDAQ. As long as we can hold this level of support in the 4811 area, I think that the market's in pretty good shape. Let's take a quick look at the S&P 500. The S&P 500 on Friday was up 8.51 points, 0.41%. The S&P on Friday became the third of our major indexes to take out short-term resistance. We took out short-term resistance in the 2094 area, closing at 2096, actually 2097. Trading volume was lower than the prior day and was below average. The bulls would prefer to see, on a move above resistance, a little bit heavier trading volume. In fact, significantly heavier trading volume. The light trading volume is a cause for concern. It will be interesting to see whether we're able to hold that level at the 2094 area. The S&P 500 is in a confirmed uptrend. We've been in a confirmed uptrend since January 8th. Last week, we had 3 distribution days disappear due to age. Right now, we have just 3 distribution days on the S&P 500. That's actually pretty good for a confirmed uptrend that's over a month old. I want to take a look at the accumulation. In the past month, we have had 1, 2, 3, 4, 5, 6 days of accumulation compared with 3 days of distribution on the S&P 500. That's a bullish sign, having more accumulation than distribution, and we have a lot more accumulation than distribution in the past month. Our 1 to 6 month timing model right now is on a margin signal. As we mentioned before, margin signal means that aggressive traders can use margin to leverage their portfolios. Conservative traders should be fully invested at this point. I'm going to continue to say that the S&P 500 is bracketed by minor support in the 2064 area and resistance in the 2094 area until we break convincingly above that 2094 area. Finally, before we go, let's take a look at the MACD histogram on the S&P 500. MACD histogram right now is above the 0 line, which is bullish, and is trending higher, which is also bullish. The 2 bullish signals give us a bullish bias on the S&P 500. I guess that's about all I've got today. If you want to talk about the markets or any of our trading strategies, please feel free to give us a call. Drop me an email, or if you'd prefer, make an appointment. Come by the office, see what we're up to. If you're out of the area, we can also set up a Skype session. See my contact information on the home page. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Trading. Finally, please take a quick look at our disclaimer video posted below this one. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I'll see you again tomorrow.